Good morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. It is Tuesday, the 14th of July. I'm Mark Gardner. So apart from chip stocks getting smacked overnight and the new SK Hynix ADR not after having a brilliant debut, sort of getting hit in Korea. Add to that, oil's up 10%. We're only up about 3% yesterday. So it's added an additional 7%. And with the Iran war is basically officially back on. We've even got Congress saying as much, Donald Trump saying as much, and it really has now escalated back into a fully blown conflict with the fourth day of attacks being, taking place. So not a good thing at all for markets generally, and then you just add to that we had the chip stocks slide back a little bit as well, or not a little bit. You can see there on the left hand side, anything on those chips in that involved in those chip stocks pull back. That volatility at the top of the range is just continuing in the stocks. That's never usually a very good sign. And we had Korea hit the circuit breaker again yesterday. Look. There's a good little chart to sort of say, to show how often that actually does happen. It's certainly not an uncommon thing to do. We've sort of seen 1, 2, 3, 4, since January, we've probably seen about nearly 20 odd circuit breakers, both to the up and to the downsides. So, that's what happens when you've got really two stocks, but sort of six stocks that make up like 70% of 60 to 70% of your index in South Korea. So, we're really deep red there for all of those names that are involved in the chip, in the chip sector. Meta go back a little bit of ground. Some of those software names gaining a bit of ground. They do seem to be quite mutually exclusive. The money that flows out of the chip stocks kind of comes into software a little bit and vice versa. The oil stocks up, around that 4 to maybe 5% mark. Still not really breaking up, to be honest. I would still call, we currently hold Chevron, but things like ConocoPhillips and Chevron particularly look pretty good on the chart, and we do have oil back at $80 now, and I look, and Trump's saying that he's going to charge a 20% fee and he's going to blockade the Strait of Hormuz. That for a fully loaded super tanker, that's like $32 million versus what Iran was proposing to charge, which was $2 million. The IMOs said that that's basically not permitted under international maritime law. But look, Trump doesn't follow the rules of his own country, let alone the rules of international law. So good luck with that, IMO. Now, the Omani route is been virtually emptied. We've got someone sort of on the ground there. Kifla said that only 14 vessels on Sunday and 37 versus 37 a week earlier. Bearing in mind that it was about 130 ships a day, including cargo ships that were coming through and, pre this. So we really do have, the straits. The traffic's essentially gone to ground to an absolute halt there. So, and you've got Europe facing a 600,000 barrel per day jet fuel deficit in Q3 versus surpluses kind of in US and Asia. So Europe yet again, the hardest hit out of this, and we're just going to be a little bit reminded that there was rumors around the Kremlin that Putin was talking about having another assault on Ukraine, and that the Ukrainians did bomb a major sort of diesel refinery as well, which has sent the crack spreads wide, which is and diesel prices through the roof as well. So that's going to really affect farmers and food production and things like that, and just general heavy industry and transport. So whether we get a necessarily we get a further shift up in crude prices, those diesel prices, because of what's going on, between Ukraine and Russia as well, is really adding to the pain here. And I would be mindful of the fact that Putin is a bit of a master of strategy, and I think when he hit Ukraine initially 4 or 5 years ago, there was an energy shortage going on in Germany because they'd switched to renewables, outlawed coal, and then had obviously didn't have the battery technology and didn't have any wind and didn't have any sun for extended periods, and they were very much reliant on those pipelines and natural gas, which is it puts them in a really difficult spot again. I think they've made quite a lot of other arrangements. The French have been probably the long-term smartest. They're basically powering most of Europe at the moment with their nuclear power plants. I believe Spain, Portugal, Germany, among 3 countries that currently are buying nuclear power off France. So Tesla fell with the chip stocks as it seems to be at the moment. It's kind of more so following chip stocks than it is following automobiles. But yeah, look, it's you've sort of seen that switch back to that defensive defensive ilk as it stands at the moment. ASX did okay yesterday, finished fairly flat, but in a world where the S&P 500 and the Nasdaq futures were down quite a bit. Nasdaq's fallen 1.5% overnight. The Russell put down 0.78. The S&P down 0.8 and the Dow down 0.45. Truth be told, that is that's pretty miracle result realistically. I still think equities are way underpricing the risk to the downside here at the moment. Sitting at fairly high overvalued levels. We've got geopolitical issues, and like Leslie Graham, which is Trump's strongest ally, passing away as well, doesn't really help in terms of the political uncertainty. The midterms, we've got the Democrats strongly leading the House here at the moment, and because we've got these oil prices raising back up again. Particularly from a comment from Fed Governor Waller last night, if we get another high print, and I'm referring to inflation, he's going to treat it as a signal, not noise, and that's not good for bond yields, and it's not good for the rate outlook. So we did see markets now pricing a 50% odds of a July rate hike. I think it's a material shift from a week ago. However, there's no way it's 50%. I think that's just the market's getting a little bit caught off guard and people covering positions. So we've got CPI out tonight. That'll be at 10:30 before the US market opens. They are looking for a lower monthly number, the first lower monthly number since the pandemic, actually. But obviously it's backward looking, and it's taking into account that drop in oil. But look, if we don't get a negative or a low number tonight, and then we've got those oil prices back up again, we could be in a little bit of trouble here. I would expect. The only thing that's been holding this thing up has been the chip stocks, and they're looking, like I said, they're volatile at the top of the range, and going largely sideways, but having regular 4% moves on the index on a pretty much a daily basis. So that's where we're looking at. And look, this was a campaign we did back in May, and buying the dip in the S&P 500 index. We just couldn't buy for clients up here. So we went and formed and formulated an S&P 500 index investment over a 3-year term that uses options, but also has a 6-month observation period till November, whereby we get on the nominated weekly day. So it could be a Tuesday, it could be a Wednesday. The day that we nominate is essentially the lowest settlement price of that day for the next 4 months is your actual entry price. So you get to invest here while vol's a little bit lower, and you get quite cheap. You get quite cheap calls, and then you get leveraged upside. So, and being that we're buying calls, it's a packaged investment. There's some derivatives and options involved. The leverage works to the upside, not to the downside. So your initial investment is a hell of a lot less than what you need to invest in cash. So if you're holding $100,000, say for instance in an S&P 500 ETF, you invest around about the $16,000 mark to get $100,000 exposure, and then you've got a whole bunch of capital left over that you can deploy into individual stocks, or you could deploy into safer asset classes like fixed income. And it takes the stress out of buying the dip, because as we all know, and I've been doing this for 30 years, the day. It's always easy to say you'd buy it in hindsight, but it's always pretty scary when it's down there. I've been through enough black swans, and I still feel it. So you got to have nerves of steel if you think you're going to cut through the noise on the day and buy those dips. So it's a really sensible investment. It takes that guesswork out, and then gives you that index exposure for the next 3 years. So very popular investment, very good investment overall from our point of view, because we do think that with Trump in the White House, the Trump put is a pretty good trade. Gold and silver fell away again overnight. I mean, for whatever reason, they're now a risk. They're a risk-off trade. There is still central bank buying in these things, but there's been a slew of downgrades. I can honestly see that that this will be probably a really good buying opportunity on a long-term basis. But it doesn't help when you've got those increasing bond yields, because gold and silver don't yield. People go back to treasuries, and they tend to switch out of gold and silver. There probably will be under, those precious metals and those store of value will be under a little bit of pressure for the medium term, particularly while inflation is around and rates are looking like they're going higher. Once we tap out in rates, it's probably not bad timing to start to be getting back into those cyclical names like lithium, which is that HLIT there next to coal, and uranium, URA ETF, down as well. Look, they're essentially, they are very cyclical, and higher inflation and higher rates is not generally good for cyclicals. And the big, grey blue bar there, obviously crude oil up 9.5% from yesterday. When we spoke yesterday, it was already 3.5% of that was already in it. And we basically had Trump. I think he announced that he was the naval blockade was going to recommence from the US around about 1 a.m. in Sydney time. So that was when oil really kicked on. But one thing I will say, it doesn't look particularly spectacular on the bar chart, but copper, just yet again, it's cyclical. The price, down 0.8%, still up 1.5 for the week. Like, the price action in copper has just been so solid. It just doesn't seem to dip when the rest of the market dips, and then it tends to grind higher. And it's kind of been, it's been, well, for those of you who like copper, and we have been massive fans of copper for at least a couple of years. And BHP, Rio, shareholders would be very happy, as well as, well, probably Sandfire and Freeport McMoran. It's been a long wait to get that move up in copper, and this really solid price action. And there's a lot of talk about it around the market. And as we saw with silver last year and gold last year, when commodities go on those breakout runs, they can really run hard. So coal as well is kind of the quiet achiever, I've got to say. Didn't really pull back anywhere near as much as crude did overall. It's been doing quite well, I've got to say. And iron ore's been so quiet. It's been really, really quiet. It's been around this, 751 or whatever. Yeah. Price for it, like, an extraordinarily long time. And then obviously, you've got the US dollar still grinding a little bit higher, but that's again on those heightened bond yields. So we do have tonight, it's bank day. We got JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, and Goldman Sachs. So never had all five on one day, apparently. And but it'll give us a lot of insights into what's going on in the economy, what's going on with credit stress. I dare say that there'll be some pretty lumpy fees from SpaceX. And speaking of SpaceX, it is back to that IPO price as well. I think patience will be a very good play there. But here we are. Well, we're at 139. The day's range. So the day's range is 136.78. It's kind of around about the lowest point. I think 135 is the 52-week low. So well done to those long-suffering, long-term employee shareholders that did sell some up 30%. That was the high for the first week or so, and before it sort of pushed higher. There's not a lot of free float in that stock at the moment. We'll start to see more and more be released over the course of time, but really has seen nothing but down since it joined the Nasdaq, which is obviously not helping the Nasdaq because it being $1.5 trillion or $1.7 trillion and replacing something much, much smaller. The influence of this down move in SpaceX is a much bigger deal than the stock it kind of replaced in the Nasdaq 100. We got Taiwan Semi as well on Thursday, but there has been some initial sort of reports around that, but this will be for Q2 and then some guidance as well. But it's been largely going well. I think the analysts are pretty happy with that. United Health, BHP will give a quarterly. It looks like at 8:30 on a Thursday morning, and Netflix, which is one of the old Mag 7. I don't think we'll see too much market reaction out of that generally. And we're going to start to see some hyperscalers around Google on the 22nd and Meta and Microsoft, I think, on the 29th, and then Amazon on the 30th. So towards the end of the month, and I think what's going to be really watched is going to be those capex numbers. So it's going to be, I think, it'll be a little bit more of a difficult earnings season than normal. But there wasn't much in terms of corporate news. There's a couple of small figures out today in Aussie, but I think all eyes are going to be on US inflation. So review your portfolio, have a look, because we are sitting at pretty lofty levels, and it's a good opportunity to get rid of some stuff you probably don't want. Obviously general advice only. But have a great day, people, and we'll speak again tomorrow.